The assets grew to 22 trillion, which was well in excess of the objective of getting to 20 trillion by 2025. This was achieved 1 year ahead of time. So the reason why the assets grew was basically due to a couple of things. One, our contributions grew by 13% year on year, but even more so, the money that we realized, the money that we made from our investments was very, very good. When you look at the year-on-year situation, the realized income, as you saw from Patrick's presentation, grew by 15% to 2.528 trillion. Last year it was 2.2 trillion. So the movement is 15%. Now, part of that was driven by the recovery in the equity markets. When you look at the return that we made on the equity side, we made over 20% year on year. That is when you compare the movements of the prices and the dividends we got. To give context in terms of the dividends, year on year, our dividends grew by 21% from 145 billion last year to 175 billion.
What's interesting with real estate is, if you look at our pension towers, look at Loboa, look at Workers' House, look at Useful Will, look at all the properties we own, it's only 7.7% of our portfolio. But guess what? We get the most trouble from that because it is the most visible in terms of what we do. But in terms of the size of the portfolio, it's actually relatively small compared to the entire asset base that we have.
Is on the progress on real estate projects. Pension towers today, we stand at about 82%. We had hoped that this project should have been completed this year, but unfortunately, by the look of things, we can't. We are looking at the project being completed next year. In terms of the other big projects, Temangalo, we had 45%. Mbale, we had 75%. Useful, we are still at design stage.